Welcome to Investor XP. This is the news show that covers investing for gamers. Our message? We want gamers to become investors and secure their future. We believe that gamers like yourselves have strong, intelligent communities that allow the cultivation of ideas, and that gives you a distinct edge in the stock market. This show, we discuss investment ideas focused around gaming, entertainment, and technology. I'm not a professional analyst, but I am retired under the age of 40 because of investing, and I want to help you build a better financial future. You can track my stock picks from the show on our website, investorxp.com. You can also see exactly what I'm investing in at kidbrokers.com. I'm building my kids' college fund with the very stocks we discuss on this show. It is Tuesday, June 6th, and we got a great show for you today. We're going to be talking about some semiconductors that go into basically videos. We got some Autodesk stock we're going to be looking at. Worldwide Developer Conference was yesterday. We're going to give our full recap of that. We're going to continue on with our clothing stock. So we're going to be checking out all of those. Each of those is going to be an individual video posted up at YouTube today, and that's what we got coming up live for those of you who are watching live. So let's go ahead and we'll jump right in. We're going to start looking at Ambarella, which they make chips that go into different types of cameras. Kind of think of it a little bit like GoPro, but they make the processor in the cameras and stuff like that. This was a viewer had a question about this stock, wanted me to let them know what I thought about it. So we decided to take a look at it. This stock's flown under the radar a little bit. Let's go ahead and we'll pull up the statistics on it to get started here. Pull it up over on Yahoo. It's up almost 2% today. You can look at, let's show you the chart real quick here. We'll go to the chart. Public about 2012. You can see it had a nice spike up here around 2015. And it's up overall since its initial public offering. It's traded a little bit sideways over the last couple of years. So let's take a look at what we've got here. 35 times earnings. Let's go to the whole statistic page. And I'll show the company itself for those of you who aren't familiar with the product. So forward, it's 24 times earnings. It's up 26% for the year, which is not bad. It's doing better than the S&P. Momentum-wise, it's trading at 60, so it's above its moving average. So stock's got some momentum, trading with some momentum there. Not bad. No dividend. We don't like that. No dividends. We don't like that. They've had some interesting growth in sales. 260%, so they must have gotten a big spike in sales. She doesn't show any debt here. I'd have to look closer at their balance sheet. Sometimes it doesn't register over. $400 million in cash. So not bad, decent, all right cash flow for the size company that they are. So statistically, not bad at all. Let's go over to their website to show you kind of what they've got. They make different types of cameras and primarily the chips that goes into them. So their product, security cameras, automotive cameras, drone cameras, VR, and different broadcasting cameras. So you can see some of their drone cameras at work here and some of their sports cameras. And I was immediately, when I started looking at this and looking at their products, I was like, wow, this is like GoPro. And they actually got some better stuff than GoPro. So if you look at, let's show their technology page here. It's their chips where they build in their architectures really is kind of their niche that they have. And utilizing these chips in the camera so that people can program on the software side as well to get the most out of it. So I thought that was an interesting take. if you look at GoPro was really, really hot. And they kind of dropped the ball. Look at their stock. Let's look at their maximum size. You can see GoPro out of the gate. They spiked up big time. And then they've kind of fallen flat. This premium camera setup, people aren't really buying it because cameras are so good that are on your iPhone and things like that. So other devices that they have where they're built in, where really to get the differentiation is to normal people. There's not really a lot. We always like to kind of take a peek real quick at what tip ranks because they'll see what analysts are covering it to show kind of what their price targets are. So it's at 68, so you got a little bit of downside with the low at 65, 14% upside. So it's decent amount of upside on it. My overall take on this is cryptocurrency. Thanks for the thanks for the comment. Thanks for watching. But my overall take on it is a little bit. I think they're much better than GoPro if you're looking at this type of investment. The company is, but my take on it is maybe someone would buy them out for their chip technology if you're going to buy them. I don't see this market area. There's so many people that have got the cameras and everything built into their devices. It's very specialized, and they differentiate themselves a little bit with the drones and the IP cameras and stuff. So they've kind of skidded under the radar. I don't see a huge jump in them. Possibly a takeover bid or something. Not my cup of tea, the stock. I'd be really curious to see what people think. They're just, I think with the amount people are spending on their phones, they're happy with the cameras that they get on there. It's not a very specialized play. Like I said, I could see someone buying them out, but I don't particularly buy stocks looking for a buyout. But it was a very interesting question, interesting pick from the viewers. It was cool checking them out, but not my cup of tea. I'd be really interested to hear what you guys think on their stock and any stock like it. Put the comments in the description of the video below, and we will move on. So next thing we want to take a look at is another viewer item that was asked about was Autodesk, and we've been waiting a little while to do Autodesk as they are kind of heavily into game development. We're trying to focus on gaming, technology, and entertainment stocks here, and Autodesk certainly falls into that. And they are a professional solution as well. Very pricey, some of their software. So we've been getting some questions on that, so we decided to go ahead and take a look at them. I've used some of their stuff, and it's top level software. Definitely. Company wise, let's take a closer look at the stock there for Autodesk. I'll pull it up here. Pull it up full screen. So let's just look at the maximum. I mean, to say that they've gone up big time is an understatement. Look at the spike in the last couple of years, which is really surprising looking at the statistics of the company. Let me pull it out to 5 years. You can kind of see the big ramp in the last 5 years. Even the last year, had a really good run, really good spike. The statistics on the company really surprised me. They are up almost 90% in the last year, which is, I don't think a lot of people are talking about it. It's run huge. So they're well above their 50 and 200 day moving average. So lots of momentum behind them. The thing is, they're not making money. They've lost some money lately, which was surprising. You can see negative earnings there, and they're actually trading almost 100 times forward earnings, which to me makes the stock very expensive. So we don't like those things. Profit margin, you can see the last few earnings reports that they've had have been bad. They've been losing some money here. I didn't expect to see that. No dividend. We've already, we beat that horse to death. No, we don't. We need dividends if we're going to invest. But I generally don't discourage other people. Don't follow all of my logic on investing. But it disqualifies me from buying it for the kids' portfolio because we like to have the dividends. But cash 1.1 billion, debt 1.4 billion, so that's a decent situation. And cash flow 50 million, 200 million. So they've had some big operating expenses. Really surprised on the cash flow for them being a software company. Not a little surprised on the debt. A little surprised on the cash. I thought they would have more, and I really thought they were more of a profitable company. But looking at some of the earnings lately, they've slid. So those who aren't familiar with Autodesk, engineering, AutoCAD, things like that, they're used for. We're going to take a look at their media and entertainment collection, which they have Maya and 3ds. So, and it's 2,000 per year for a single license. It's very expensive. Appreciate the video we watched last week. Have you seen StockScreen? Yes. Yeah, let me go over the chat real quick. Yes, I have seen StockStream. I want to do a video on that. I think it's crazy. It's really cool what they're doing on Twitch with that. It's we'll do a video. I'll probably do a video tomorrow. I'll do a whole story on it. I've got that tagged. It's if those of you who haven't seen StockStream on Twitch, check it out. But I'll do more of that tomorrow. So you look at Maya and 3ds. They can be used for film and making video games and stuff. They have their character generators. It's all high-end, very good software, but it's very expensive. And really, a lot of indies aren't going to be paying this type of money, to be honest with you. And so they're going to look for a way around it. And if you're a big studio in-house, you're probably going to have your own stuff that you develop with. You might use this in some areas, but you'll probably have your own proprietary stuff. So where they land is kind of that middle ground. So I can see where they've slid a little bit, but really as far as AutoCAD and things like that, they really corner the market. So I could see where people were pulling in and they've run up on the investment. I was just really surprised at their losses lately and their lack of additional cash and cash flow. Really didn't expect to see that. Going to take a look at tip ranks to give the kind of the analyst spread on it. 8 analysts, a lot of them strong buys, 1 sell. The problem is there's about a 1.5% upside here. So there's not a lot of movement from the analysts on this. And with that and how it's run up recently in the year, I would expect a pullback with them pretty soon. So Autodesk, we're going to kind of stay away from them for a little bit. They don't pay a dividend, so we're not going to buy them. As far as an investment for folks, I don't like it as an investment. Till they get some things in order, maybe we see an earnings call or two. where they are profitable. I mean, it's run up to 100 times earning, which is pretty high. So, not liking them at the moment. Nemes Check. I don't believe I've heard of them. I can certainly look into them and let you know what I think. It's not ringing a bell. I will check them out. What industry are they in? Oh, they're a competitor with Autodesk. Okay, I can do a follow up tomorrow. I'll check them out. What software do they make? Do you know? No. Okay. Okay. Over in Europe. I'll check them out tomorrow. Thanks for the heads up on that. I'll see what they've got. I use a lot of different oddball software. All right, ArchiCAD. All right, we will check it up and we'll do a follow up on them tomorrow, and we'll see what their market looks like. That'll be a pretty cool one to check out. So we'll do that as a follow up tomorrow. If yeah, let me know what you think of Autodesk in the comments below. Um, Not buying them right now. I'd like to know other people's opinion. It looks like they've been bought up pretty good, so we're going to be staying away from them. So let's move on here. Yesterday at the tail end of the show, we got to look at live a little bit of Apple's Worldwide Developer Conference. So we gave some quick thoughts then, and last night I was able to actually watch the whole thing. So going to try and go an overview of what we thought from the conference and what's going on with the stock today. So we'll take a quick look at that. Two video on Tesla. Yeah, I've done let me go over to the Twitch chat here. Yeah, I've done a video on Tesla. Uh, I think Tesla is a scam and a scheme. We'll be doing a follow up video pretty soon on Tesla a little bit as more earnings and stuff comes out. But Tesla really, uh, I don't I don't know. They don't deliver on what they say, and I've really, I don't know. I haven't been a big fan on Teslas to say the least. So yeah, check out some of the old videos. If you wanna check out at any time, let's show this real quick here. Go to investorxp.com. Pull it up here real quick. It's a website. It keeps track of all the different calls and videos that we have. Uh, so you can see down here on the right, there's Tesla. You can just click on the link, and these are the different videos that we've done on Tesla. It's easier to find than going through the YouTube. So investorxp.com. Check that out if you want to see any of the old stock picks that we've talked about. They're all there. It's pretty easy to follow. Uh, but let's take a look at yesterday's. Trying to hit everything that they talked about in the Worldwide Developer Conference. It started with. I'm over at Mac Rumors. I'll put a link in the description below. They have some pretty good coverage of it, but there was a downgrade earlier on in Apple stock, and I think you're going to see Apple stock slide a little bit. I'm really surprised to see that Apple stock is actually up today. I expected some more sell-off and people basically getting out of Apple stock, which I don't think is a good idea. I think you should certainly be long Apple stock, but you're going to get the sentiment from these different, whenever they have the Worldwide Developers Conference and things like that, people will say, well, that's not the coolest thing that Apple's ever come out with, so they're losing their touch. And people stay away from it, and then the iPhone comes out, and their sales are incredible, and the stock goes back up. So uh, people are kind of always waiting for Apple to lose their mojo, and then it creeps back up. I mean, they're such a solid company with the amount of cash and everything that they have on hand. They're going to be fine. Great investment, in my opinion, for them. But let's take a look at the Worldwide Developer Conference. MacBook Pros. They talked about those. Nice refresh. The thing is, again, Apple is always sold well on their Macs with old hardware, and even this update wasn't that great, but it's they'll sell them. Their Macs are going to continue to sell. People use them, but it's their typical refresh on it, which it's really good stuff, but it's not cutting edge, and people are going to buy it. Let me kick over the chat there. Yeah, a lot of people aren't big fans of Apple, of their product, but I mean, with the amount of cash and stuff that they have, it's hard to, and the dividend that they pay and stuff. I have a lot of friends that don't like the Apple hardware. I've always used Apple hardware, but I mean, you can't ignore the amount of cash and everything that they had. One of the interesting things was the iMac Pro, which, all right, now there's the super high end stuff, really pricey though. And they were comparing to, similar things would cost 7-8 grand. That's one of their little tactics that they use, Apple does, so that they can justify their premium price. The thing looks great, thing looks killer. It's basically a server grade chips and everything in it for all-in-one desktop. So it's pretty crazy. Be interesting to see how many of these they actually sell starting in December. They've kind of ignored the high-end Pro people, and a lot of them, people in the industries that use Apple, use their laptops anyways. And that's kind of where their growth has been in the Mac. But it'll be very interesting to see. People were very adamant that they wanted this, and there's been some good feedback on it. Not so much at some of the other stuff that they revealed, and we'll get to that in a second. High Sierra, they keep going on with these periodic OS 10 updates. Very good, solid updates. They're free. They keep pushing the operating system in a better direction. I like what they do with their operating system a lot better than what Microsoft is doing. Microsoft they need to stick with one thing instead of splitting up their operating system and everything that they're doing. I like Apple's model with the operating system. Metal 2 was very interesting. Their graphics that they used there and some of their VR and augmented reality stuff that they had was very interesting. Let me kick over to the augmented reality. The demo that they had was pretty cool that they had in there. And they even showed some Pokemon Go stuff with the new augmented reality kit that they had in. That, to me, the AR kit that they had was the biggest thing from the Worldwide Developer Conference. If they're making a strong push for that, I think it's going to be a very good thing for Apple. Curious because they didn't have a lot about the Apple TV, and it's like Apple with the augmented reality and a lot of in their metal APIs that they use, and what developers are able to do with that in a short time. To me it's always ripe for them to get into more of the gaming console race, and they could take a huge chunk out of that, especially working with Nintendo like they have been. But they always take a step back. They have some really cool stuff, and it's like Apple never goes full blown. And yeah, that's what I'm hearing too. Pull that up. I'm losing you there on the chat. Here, last comment here. It's cut off for some reason. See if I can push it up here. There we go. Yeah, AR. I'm hearing too that it's gonna outperform VR, and that to me that makes sense because one of the things about VR that I'm hearing is you don't get the long play times with the big headsets and everything. And that's where Nintendo and some people are they're not ready to quite go full VR yet because the experience, a lot of gamers, they like those marathon plays and it's VR's not there. So I'm happy that as an investor in Apple that they're going the AR route, which looks like it's pretty good. Some enhanced Siri stuff and the maps that was pretty good. The WatchOS stuff was all okay. Big one, and here is where they're getting some backlash, is the HomePod speaker for $349, and it's going to compete with Amazon Echo. The backlash I've seen on a lot of the Apple talkbacks here is way too expensive, and they're too late to the game. Google and Amazon are already there, and they might even be there better than what Apple has, and it's too pricey. Now, seeing people have gotten some hands-on time with this, they say it sounds great. So once again, you've got your high-end Apple product, and I think people are ultimately they're going to buy it, and they're going to get into that. They're going to get into that market, and as their Apple Music grows too, it's going to do it. Be very curious to see how that sells. And they had some iPad Pro stuff, which iPad is a slipping sector. We'll see if that grows some sales there. But AR to me was the biggest thing out of the Worldwide Developers Conference for sure. Definitely the biggest intriguing thing from them. Pro Max, all that stuff is going to sell. The refresh in Macs is just going to continue their sales on Macs, which are growing. Really surprised that they didn't have more about Swift playgrounds and things like that. That really, to me, is their big Trojan horse, is as they basically lock in children as developers who will continue to develop for their careers using their APIs and everything like that. That's going to ensure Apple has a steady user base in the future. And they really didn't talk about that in the keynote a whole lot. So some interesting stuff at the keynote. I was surprised that Apple stock is up today. That was really surprising, especially since they got a downgrade recently. It was down yesterday. But I'm kind of expecting Apple stock to slide a little bit ahead of the iPhone launch, and then post iPhone launch it'll go back through the roof, and especially if we hear anything about bringing the cash back from overseas, that's going to be a big thing for Apple stock. So overall, it was a pretty good presentation, the Worldwide Developers Conference. Watch the whole thing. It's interesting now that they have multiple people taking a look at it and doing their presentation versus it was all basically before a Steve Jobs show. So I wonder if they're trying out more people to see who's got the best audience presentation, or who really gets the audience into it. So I think it's cool. I think it was a good developers conference. AR is the big thing out of it to me. Let me know what you think of Apple post Worldwide Developers Conference. You still buying the stock or not? We think it's a buy long term. Very cheap, pays a good dividend. Apple is one of the ways to go. So we'll finish up here. I got one more story to do. Let's pull it up. This week we've been talking about apparel stock, and we'll do another one today. We'll make our pick at the end of the week. So, looking at apparel stocks today, we're looking at Destination XL. It's a big and tall store. Used to be Casual Male, extra large. Destination XL is the name of the company. And so we decided we're going to take a look at that. We've looked at Nike, Under Armour, Foot Locker, and Hanes. So this one looks like a no-brainer. Destination XL. Uh, Obviously, a lot of gamers are overweight. Me being one of them. Obesity epidemic in the country, and really spreading to other parts of the world. So, if you're looking at apparel stock, why not look at the big and tall one? Investing in that could be a gold mine. So let's pull up their stock and see what we have. The spoiler alert: it's not that great. So let me pull it up here full screen. Down 3% today. Uh, Cheap stock, as in it's only $2.50 a share. Here's some problems that we're seeing right away. No dividend, so we'll just get there right away. Um, Over the last 5 years, they've been in a pretty good slump. Okay, so upwards of $8, now down to $2.50. Okay, so let's take a little bit closer look at the statistics. Forward earnings is 40 times. So at you know a little over $2 a share, they are still 40 times earnings, which is very expensive. A lot cheaper stocks to be had out there. They're down almost 50% for the year. Now, if there were some great stories, great catalysts here, that would be a good thing. You can get it really, really cheap. But to be down 50% and still have 40 times forward earnings is a problem. Losing money. Okay. Highlight that there. So, never a good thing in business to be losing money. No dividend, like we said. Almost 8 million in cash and 80 million in debt, almost 35 million cash flow, operating cash flow. So, okay, cash flow wise for the size company, I should say, compared to their cash and their debt situation. Really thought they'd be a more sound company, and it looks like they're struggling a little bit. So let's go over to their investors page. And let's see what their strategy is. They may have a really sound strategy that will get them out of this, and that's the kind of thing that you look for, and you look at their strategy that they may have, and then you can look at this and say, well, geez, it's cheap, it's going to double. They've got their stuff together, and again, spoiler alert, not really. So here's their investors presentation from May. I wanted to point out a couple of things here. And again, every one of these is going to highlight the positive things. I always try and point that out when you look. It's good to look at the investor relation because you want to get their plan. Don't always get suckered in with all the positive aspects that they have, because they're going to put the most positive things to show the company in the best light possible. But you do want to look at the strategy and say, does their strategy work for me? Can I get behind this strategy? Can they execute the strategy, et cetera, et cetera? So they're basically saying, they want quality customer service, quality goods that they're going to sell. Okay. They have an effective display layout in the store, to get the most sales when you walk through. Here's their partners that they have in there. Luxury brands, good brands. They have the whole gamut that they want, whether you're getting activewear or suits there, and they really they're saying that 6 out of 10 big and tall guys don't even know who we are. So they want to up their marketing and stuff like that, and business awareness, um, acquisition, retention, the old rewards program. Got to get the rewards program. Well, the rewards program isn't that great. Uh, Direct mail, give me a break. Email, come on. You know, no one likes the email. Um, so I the only thing that was really positive here is uh, global growth that they're going to attempt. Um, so uh, basically, they want more people to be aware of the store, um, and they got to get some more customers, and they're going to do that with email. Don't like, I don't know. I wasn't particularly blown away with their strategy. Um, Fairly oversimplified. Um, a lot of people have much better rewards programs to get people going to retail. And again, it's retail, so there's another reason to be skeptical on it. A lot of retail is getting beaten up. Um, I'm surprised at their statistic that they're saying 6 out of 10 uh, people don't know about their store. I don't know where large people buy all their clothing at, if not a place like this. But um, another dud for today, looking at stocks. They're certainly not going to make the cut. The ones we've looked at so far: Nike, Under Armour, Foot Locker, Hanes. Probably the best of the group right now are Nike, Foot Locker, and Hanes. Don't like Under Armour and Destination XL. At the end of the week, we'll pick which clothing stock we're going to go with to add to our speculation list of potential invest in. But not liking them, I was really surprised at what I saw when we were taking a look at them. So let me know your thoughts on today's apparel stock that we're looking at. Yeah, good point there. Seen advertising games, yeah. They need to kick up their NFL advertisement. Um, yeah, I don't know. They don't have a. If you're looking at retail, if they don't have a lot of locations, that's a good potential for growth as they grow their stores and everything. But it seems to me that they don't have a great customer acquisition model. Um, and if email is one of your primary things that you're putting out there in your strategy, I think it's a fairly archaic way of getting people. But that's my thoughts on it. Let me know what you think in the comments below. And that's going to be it for today. We're going to wrap it up. If you want to contact the show, the information's behind me on the screen. Shoot us an email. Chat with us live Monday through Friday, 1:30 Eastern, 12:30 Central. Let us know what stocks you're looking at. If you want us to look at some, we always get some really interesting viewer picks, viewer questions. So like to see that. Go ahead and post your stock picks in the discussions on the videos we post up on YouTube. I really want gamers to start to see different people's strategies and hopefully get more people involved. Subscribe if you haven't already. Like the amount of subscriptions we've been getting lately. Growing the channel. Really want to help grow the channel and the community. So really appreciate that. Any feedback you can give me on the show will ultimately help make the show better. So thank you for watching, and we will see you tomorrow.